In this week's episode of the Stockscores Market Minutes, I'm going to talk about the 4 virtues of trading. I'll do my regular weekly market analysis. We'll do a market scan in search of opportunity and look at the trade of the week on ASLN. All right, so let's talk about the 4 virtues of trading. I was inspired this past week when I learned about the 4 virtues of Stoicism. And I thought that they had a good correlation to what I think is important in trading. Now, the 4 virtues of Stoicism are courage, justice, temperance, and wisdom. And if we adapt those to trading, if we can talk about courage, it's really to do the work and have the courage to make the trade based on the work that you have done. When we talk about justice, it's doing the right thing, following proven rules of a strategy that you have tested. Now, one thing I find many traders have difficulty with is the temperance part. And that's really what piqued my interest when I was reading about the 4 virtues of Stoicism. And that is, when we're trading, we have to avoid being reckless. To be too courageous borderlines on recklessness. And if we are too passive, then we are not going to make any money because we are maybe too afraid to make the trade, or we just don't have the confidence. And so temperance is important, to not be too reckless, but also not be too passive. Ultimately, we want to plan the trade and trade the plan. And finally, wisdom. We want to heed the lessons of experience by trading rules that work consistently through different market conditions and large amounts of data. I have seen many traders have success in a hot market, but then cannot transfer that success to a quiet one. And although you won't ever be as successful in a quiet market, what you can do is avoid giving back those big gains when you have a hot market condition. And that just comes from experience and wisdom. And those are things that take time to learn. Those are things that I can teach you through the different course options that we have at Stockscores. All right, let's get into this week's market analysis, starting us off with the US markets. And this is the chart of the S&P 500. You can see that we are moving up in that upward trend. We've been in the latest sort of segment of the trend. We've been up for now 6 weeks in a row. This past week we stalled a little bit. I think we actually finished the week down slightly. And that is reasonable given the gains we have made over the previous 5 weeks. And I think that it is quite likely we will see a little bit of profit taking in the near term simply because the buyers seem a bit tired. Now you can see that better when you look at the 30-day 60-minute chart, which I have here on screen. And there is our upward trend line on that very short-term chart, and we've broken that just this past week. Now, that does not mean that we are going to go into a downward trend necessarily. We may simply go sideways for a while underneath resistance and above support. So it'll be interesting to see if we can hold this little sideways trading range that the market has been in for a little while. If we start to break down through 398 on the SPY, then I'll get a little bit more concerned about a more substantial pullback. But for now, I remain relatively optimistic. I think just short term, we're destined for some sideways trading. Looking at the Russell 2000, which is the small cap sector in the US, and you can see that we are bumping up against resistance. Ultimately, we'll need to break through that, and then we'll find our next level of resistance up at the historic highs from last fall. On to the Canadian markets, starting us off with the TSX 60. And again, a market that hit new highs this week, but managed to move down a little bit after 3 solid weeks to the upside. If we think about our upward trend line, it's right about there, and it'd be quite reasonable to pull back to that upward trend line and then bounce off of it. Given that we had this little pullback here before we moved higher, often you see this little space here get filled in. So that's why I think we could have a few down weeks pulling back to the upward trend line going into the end of the year. Looking at the short-term chart, you can see the weakness starting to build. The upward trend line relatively good until this week, and then we're starting to roll over a little bit. Again, that doesn't mean that we're going to see a major correction. It's just a natural progression. You have a nice strongward move, people want to take some profits, and you get a little bit of a pullback before the bounce. And so I think short term, that is what is likely. Unless we can break the pullback, which is sort of a line drawn like that, I would expect some lower prices in the near term for Canadian stocks. Looking at the TSX Venture, it has fallen to its historic lows where it should bounce, and it did bounce this week. I wrote an article last week about some likelihood that there would be a bounce in the cannabis stocks, and they did that this week, and that has helped this market gain a little bit of stability. By no means is it out of the woods, and I would not get at all optimistic about this market until this downward trend line can be broken. But when markets fall into support, they usually bounce off of support, and so far we are seeing that. On to currencies, US dollar continues to be strong in an upward trend, nothing really new to say there. Canadian dollar still grinding sideways, has pulled back for the last 4 weeks. I think it bounces near term and moves back up to the 75.5 level in the next few weeks. On interest rates, we can take a look at the TLT, which of course is our proxy for interest rates. It is the 20-year bond ETF, and you can see that we're in that downward little flag pattern after the run higher. We had a couple of up weeks in a row. I think we could have one more before we hit resistance and then get stuck. Ultimately, until we break this pullback trend line, I wouldn't get too optimistic about the bond market going up, which of course means interest rates going down. And on to commodities, we'll take a look at gold first. You can see that gold is in that similar flag pattern, much like interest rates. We had a rally. We're in this what's called a flag. And until we break the flag, I would not get optimistic about gold. Given that we're sort of hovering right around this support zone, if we were to break down through that, I think gold suffers more of a pullback. So we're at a pretty critical point. What the next big move for gold will kind of telegraph where the trend is going. If we continue along to oil, you can see that the downward trend line has been broken, but not with a lot of energy. You can see very little excitement there, not a lot of volume yet. But what's encouraging is that we have rising bottoms, and that is a positive sign, and hopefully it develops into something. I'm starting to see a little bit of interest coming back to the oil sector, and I think this could be an area of opportunity over the next few months. So something to keep a close eye on as oil firms up with some positive action. And finally, the fear chart, you can see fear at an all-time low. There is no major concern, and sometimes that means complacency, which can touch off a correction. But until I see fear make a jump like we've had here or here or here, I'm just not going to be too concerned about a correction. So my ratings then, US stocks bullish long-term, neutral short-term. The same for the Canadian market. It just feels like stocks want to take a little bit of a break, although if there was a positive headline on trade, that could change very quickly. Gold, neutral long-term and bearish short-term. Oil, neutral long-term and bullish short-term. So while the upward trend is still in place for stocks, you can sense that the buyers are tired and they're taking a little pause from chasing stocks higher. Still, until the upward trend is broken, we should remain long-term bullish. Gold is drifting and oil is slowly turning higher. All right, so let's get into the Stockscores Market Scan. And this week we're going to jump to the Stockscores website, run a market scan on the Canadian market where we will look at the abnormal break scan. This is something I like to do each day. It's a way to find stocks that are breaking from good patterns with abnormal trading activity, which is sort of my formula for finding market-beating stocks. So we'll jump over to the market scan now, select from the preset list the Abnormal Breaks Canada scan, and run the market scan. Now it just went through every stock listed in Canada and it found a mere 5 that had an abnormal move to the upside with strong volume on Friday. Our next job is to just look at those charts to see if they have good patterns. Now I have my charts now set to a 3-year weekly chart because I find that's a good time frame for those longer term picks. And this stock I think is quite interesting. You can see V.NVO has broken this downward trend line, has been building rising bottoms, and in the last week broke higher from those rising bottoms. And that is a positive sign that this stock is making a long-term turnaround. The weakness here is that the volume is not all that strong. When I looked inside the daily chart, there was some good volume that came in at the end of the week. And so I would think that this is a pretty good prospect for the weeks and months ahead, and I would give it a 7 out of 10 if I was to give it a numerical rating. BlackBerry, pretty strong week last week, but notice that it is still really far below its downward trend line, and therefore, even this downward trend line, and therefore it's still just a stock to leave alone for now. And that's the key, is it's not enough for a stock to make an abnormal move to the upside. It has to do so with a good chart pattern, and most of these stocks just don't have it. V.NVO is the only one that does. All right, so let's get to the day trade of the week, and the day trade of the week is really an educational thing to highlight my day trading strategy. These are stocks that made a good move in the past week and were identified using my day trader strategy, which you can learn from the active trader course on stockscores.com. And Again, nothing that you can do about these now, but it's more for educational purposes, just to show you what I look for. And let's get into that now. Our day trade of the week this week was ASLN. This is a trade that I called out in the Active Trader webinar, which I do each day, where you can watch my trading screen and I provide my commentary. On ASLN, it was a very capital efficient trade, let's call it that, because it was a low price stock. It made its action candle at the open, and that is the signal to enter. That happened at 9:32. And because it's a very volatile stock, you didn't need a lot of capital to take $100 of risk on this trade. It meant a position of a mere 460 shares, which was $400 in capital. Now, because the share price is under $3, you cannot margin this stock, and so you simply had to put out the $400. However, if we follow our rules, this stock went all the way up to 10 RR, or very close to it, which means that it made just short of $1,000. Now, I tend to leave stocks alone until they give me a sell signal. There was a sell signal here on that break of an upward trend line. That was at about 5 RR. And then we had another one where it broke below this moving average, again at 5 RR. So let's call that the gain on this trade, a $500 gain for $400 of capital put to use. That is a 125% return on a one-day hold, and that, my friends, is a fantastic day trade. All right, well, that has been the Stockscores Market Minutes for November 25th. Hope that you have enjoyed it. If so, please click on the subscribe button, leave a comment, tell your friends, and most importantly, trade well.